What's up, guys? This is Sean and welcome to another episode of the iherng podcast. And today we'll be an Asking Sean segment. We receive a question from Ong YK. Okay, so I'm just going to read the email. Hi Sean, I have some questions in my head for some time and I hope you are to give some explanation. A bank has approved my mortgage loan for term loan fixed rate, 314,000 with MRTA. And the interest rate is 2.9 for a tenure of 40 years. So the monthly installment will be 1123. Question 1. I know that fully semi-flexi loan can reduce the interest by paying advance payment. For term loan and fixed rate, right, can I make advance payment to reduce the tenure? What else can I do to faster settle the loan? Question 2. Is 2.99 considered a good rate? As far as I know, the rate is around 4 to 4.25. So this property is considered strata, 3 bedroom, 2 bathroom, in a low dense area, 500 over units, located in Gombak. Cost around 300,000, not under affordable house. Location wise is okay with hospital, with police station and all. Okay, so one of the cons I noticed is the rental would be extremely high competitive because the area has more and more upcoming projects. Is this considered a good deal? What do you think? So first of all, for YK, right, thank you very much for actually sending me this inquiry. Let's go into the first question also, like how do you reduce loan? So talking about loan, right, I'm no expert, no banker. I think anytime you can just ask bankers, right, and they are obliged to actually answer all this kind of question instead of me lah. But my point of view is this: a lot of people will think that, one full flexi, semi-flexi, or like fixed rates would be the best. It really depends on your mode of income. How are you making your money? Are you a person that makan gaji one, meaning like every day I have a fixed amount of income that I can actually expect every 28th or 30th of the month, and there's no way to actually increase my income suddenly unless I buy Toto lah. So having that fixed rate, right, then brings down the rate, which is like 2.9. And yes, for question 2, right, 2.99 is a very competitive rate. Really, you can easily go Google around Malaysia's bank loan rates. You can actually, it's all online and you get to see their rates, which is very transparent already. But then for flexi and semi-flexi, right, it's for people who have a very different mode of income, which means that most of these people, right, are business people or they are self-employed. It means that maybe they are insurance agents, they are real estate agents, right? For these people, suddenly 1 month can 100, 200 over 1,000, but for the next 6 months, right, it's going to be empty. Then I even know like some business people, they fully use up the flexi loan, right? As this is an OD facility, an overdraft facility. It means that, okay, this house is 1 million, right? Then I take a loan which is 800,000 because they pay 20% upfront payment. And this businessman has 800,000 in cash. So what happens is he put 800,000 in cash into that bank amount. So he's just paying what he owes to the bank without any interest, because the interest is calculated based on how much you owe the bank. And at this current scale, 0. So he's actually using that facility as an overdraft, just in case when his business is not doing well. Right? When his business is not doing well, then he can anytime take out money from that facility and use it to roll for his business, because cash flow is the most crucial thing in any business lah. So it really based on what kind of payment mode are you in. Is it on fixed rate? Is it on semi-flexi? Are you an employment person, meaning like there's no way that you can make extra income already? Or you are periodically having extra income, meaning like sometimes you do freelance photography, you do project management, or you have your side gigs that sometimes maybe give you some money. So it's really totally up to you in which kind of loan you want to get engaged with. And for me, the project choice, right, like you know it's 300,000 net and the installment is actually fixed, right? One thing lacking I see from your email is you didn't put in the existing rental at that area, meaning like now you already identify which project you want, right? So you look at the neighboring projects. If you go Google Earth, right, or you go Google Map, you can see what are the remaining condos around. You just go to any property portals and see what's the existing or the going rate of the rental, right? So you go for the most basic one, meaning like empty, apa pun tak ada, what's the rental rate like? If it's still above your monthly installment, then I say you are very, very safe already in this moment of time. And I really like that you are very detailed and you really know what you're doing. So you're making decisions based on information. It's an informed risk-taking decision. So with that, right, this really makes me very, very happy. So I think that's all for this episode, right? Whether is it a good deal or not is based on the existing rental right now, and it's also based on what's your current risk appetite. Are you those that you want to flip gao one, or you want to really like hold this one first until I have enough income, then I go for the second one, then I slowly go for the third one, and things like that. So that is not up for me whether is it a good deal or not. It's really based on what you want and what are you comfortable with. Okay, and great question on the fixed rate semi-flexi and the flexi loans. I think that will somewhat also help a lot of other people. And for those who are interested in sending me questions, you can just reach me at my email iherng @gmail.com, and it will be very easy to just reach me in either Facebook, Instagram. You can just look for my name, iherng, and I think that's all for this episode. If you really like this episode, like it, share it, and even subscribe for more information like this. Until next time, this is Sean Tan.